Thank you, Kishori. So, welcome everyone. My name is Ron Abraham, and I will be hosting the Introduction to Options Trading 101. Today, we'll briefly talk about the basic fundamentals and concepts of options trading. I know it's a holiday weekend, so I'm going to make it very short and sweet and to the point. So, I hope that this presentation is useful for everyone. So, be happy to answer questions at the end. Um, don't hesitate to ask any question. I'll be more than happy to answer all of you guys. So let's start. So what we're here for. So pretty much, what is an option? An option is a contract that gives a buyer the right, but not an obligation to buy or sell an underlying asset at a specific price on or before a specific date. So what that really means, there are four elements of an option, and the following elements are an expiration date, which means the date an option will expire. We have a strike price, which means at what price you're willing to buy that asset. And the third one will be what is the underlying asset, which is pretty much the company stock option you want to buy. So, for example, a stock like Apple will be the underlying asset. And last but not least is the exercise of an option, which means when you can actually exercise the option and buy the security. So let's put all these pieces together and try to give you a real life example. So let's say you find a really nice house in Beverly Hills, California, that you would like to purchase. But you don't have the cash right now to buy it, and you only have it in 6 months. Instead, you talk to the owner of the house and negotiate a deal with him or her that give you the option to buy the house in 6 months for a set price of, let's say, $500,000. In return, you, the buyer of that option, pays the owner $10,000 in order to secure that house in 6 months for that fixed price of $500,000. In this case, there are two scenarios that could occur. Scenario one, let's say the housing market in Beverly Hills skyrockets and the new fair market value of the house is now $600,000. And due to the rise in the market value of the house, you decide to exercise that option and purchase that house for $500,000. That leaves us with a $90,000 profit on paper. How do we get to $90,000? Pretty much, you bought the house for $500,000. You paid an option of $10,000, and right now the house is worth $600,000. So in reality, you could go ahead and sell the house for $600,000 and make a $90,000 profit, or you can live with it happily ever after. But also remember that the owner of the house, the seller, was obligated to sell that house to you. So he or she collected $10,000 for the option for 6 months. They cannot back out of it. So no matter what happens, you, the buyer, paid the $10,000. You have the option to buy that house. They cannot back out of the option and saying, oh, you know what, the house went up to $600,000. I'm not selling it to you. So that's the advantage of being a buyer of an option. Let's take a second scenario. Let's say, for example, something really bad happened in California and the housing market plummeted, and now the fair market value of the house is $400,000. That would leave you at a potential loss of $110,000. Your cost basis is $510,000, $500,000 for the house, $10,000 for the option, and you could sell the house for $400,000. So obviously, since you're the buyer, you're the option buyer, you can always back out from the deal and not purchase that house. So you're not obligated to purchase the house, so you don't have to incur that big of a loss, even if it's a paper loss. But you're left without the $10,000 you paid initially for that option. So the seller will keep the $10,000 and the house. So pretty much the takeaway from this example is that when you're a buyer of an option, you have the right to exercise the option, but you're not obligated to exercise the option. The seller, on the other hand, is obligated to sell you the house if you choose to buy it because you paid him $10,000 in advance. It doesn't matter if the house is now worth $1 million or $200,000. You, the buyer, if you decided that you want to exercise the option, you are more than welcome to buy that house, regardless of the opinion of the seller. So now let's dive to an actual stock option and what it actually means. So the first type of option is a call option, and the second type of option is a put option. A call option gives the buyer the right to buy an asset at a certain price within a specific time frame. Very similar to the example we discussed regarding the house in Beverly Hills. Um, a call is similar to having a long position in a specific stock. So if you're a call buyer, you hope that the stock goes up above the strike price and before or on the expiration date. On the other hand, a put option buyer gives the buyer the right to sell an asset at a certain price with a specific time frame. A put, unlike a call, is similar to having a short position in the stock. So a put option buyer hopes that the stock price of that underlying asset, for example, Apple, goes down below the strike price and before the expiration date. So now let's give a real life example regarding a stock option. So let's start with a call option. Let's say right now the stack of Apple is about $175. And let's say that we believe the stock of Apple will go up substantially in the next 4 to 5 months for various reasons. Doesn't matter which reason, but you believe that the stock will shoot higher. As a result, we decide to buy the 200 call option for the month of March for a premium of $6.50. In this case, if we decide to hold the option till expiration, our break-even point when selling the option will be $206.50. That's pretty much the $200 that you're paying for the stock plus the $6.50 you paid for the option. Similarly to the Beverly Hills house, where you paid $10,000 as a premium to the house plus the $500,000 that we actually paying for the house. So the same thing, just in stock, 200 plus 6.5. If the stock of Apple at or before the day of expiration, for example, goes to $220, your option will be worth around $20, which represents a gain of over 200%. That's amazing. On the other hand, if the stack of Apple, drops, if the stack of Apple is below $200 on expiration, and you still didn't sell the option prior to the expiration, your option will be worthless, and you'll lose the entire investment. So you have to time yourself correctly when you purchase an option, because if you buy an option 4 or 5 months out and Apple goes down or doesn't move, your option will pretty much be worthless. But if it goes above and beyond to 220, 230, 240, you can make a fortune. So that's a call example. The same will apply to a put option. So let's say you believe the stock of Apple will go down for different reasons, and as a result, you decide to buy the $160 put option for the same month of March, for the same premium of $6.50, just to make it easier on everybody. Your break-even point on expiration will be $153.50, which is the $160 minus 6.5. The reason we're now reducing it by 6.5 and not adding it is because you believe the stock will go down. So your break-even point will really be $153.50. If the stock of Apple at the day of expiration goes to 140, for example, same thing as before, your option will be worth $20, which is pretty much 160 minus 40 equals 20, which also represents a gain of over 200%. If the stock is above $160 on expiration and you still didn't sell the option prior to the expiration, your option will be worthless and you'll also lose your entire investment. Now, each contract that you buy, an option equals to 100 shares of Apple. So buying the 200 calls option or the $160 put option will cost you $650, which is 100 shares times $6.50 per contract. Assuming you sold that contract at or before expiration for $20, you'll be collecting $2,000 on a $650 investment. That's not too bad at all. In reality, it's much cheaper to buy a stock option than buying an actual stock. Buying 100 shares of Apple outright for $175 a share will cost you $17,500 versus buying an option will cost you a fraction of that. So in this example, the rule of thumb is if you buy a call option, you want the stock to go up, and if you buy a put option, you want the stock to go down. So so why people actually trade options and what are the benefits of trading an option? So there are pretty much a lot of reasons as to why people trade options, but since our main focus today is the basic of options trading, I want to provide you with the most common reasons, and we'll try to not overcomplicate things. So the first common reason as to why people buy an option would be leverage, as one option contract controls 100 shares of an underlying stock. So that pretty much means that you can make your money go further and make much more than just buying a stock. So a $650 investment in an option can give you much more than a $650 investment in a stock. So if Apple goes up 10% and you're investing via stock, you only make $65. 650 plus 10%, that equals $65 gain. But in an option, if Apple goes 10% in a certain period of time, you can double or triple that same $650. So that's what the word leverage means when it comes down to options. The second common reason is capital outlay. A capital outlay pretty much means that you can purchase an option much cheaper than you would be buying the stock outright. As I mentioned in the previous slide, where you can buy an Apple option for $650 versus $17,500 when you buy a stock. Another reason as to why people buy options is because of the higher risk-reward ratio. When you buy an option, you can make an infinite amount of money on your investment, but your losses will always be capped at 100%. Unlike option sellers, where they can make a maximum of 100% and have an unlimited amount of loss. I will not get into it too much into sellers of an option, as it's more advanced and we can discuss it further in Introduction to Option Trading 103. But to make a long story short, an option buyer can literally make 50%, 200%, 500%, or even 5,000%. But you can only lose up to $100. I'll give you a true story that happened to me about a year and a half ago. I decided to buy a put option on a company called Teva. Teva is a pharmaceutical company based out of Israel, and they produce generic drugs. At that time, the stock was doing really bad. There was no CEO for a very long time, and I just felt like something was wrong with the company. So I decided to buy a put option for 20 cents per contract. And when they reported earnings the next day, the stock dropped 20%. So instead of making 20% on a short position on a stock, I was able to sell those options for $4. That equals to 2,000% on my investment. So this was clearly one of my better trades I made in the last couple of years, but that just shows you the example between a stock and an option. In that option, I made 2,000%, but if I had the stock, I had shorted the stock, I would only make 20%. So there is your leverage that we were talking about before. So there's much more opportunities when it comes down to trading options and not just buying stocks. So pretty much to conclude the introduction to option trading 101, we learned three very important things today. We learned that what an option is, what the two types of options are, and why people trade options. The option trading world is so big and diversified that it's very important to learn the above three components before getting into the actual technical scheme of things and how to trade options. In introduction trading, in introductions to option trading 102, I'll discuss the variables that can move an option, what can happen between the purchase date of the option and the expiration date of an option, and other variables to determine the pricing of an option. So that's pretty much that in regards to option trading 101. Now I'll just a little bit talk about of what we do, and I'll be happy to answer questions later on. So I'll tell you a little bit about us and what we do. So again, my name is Ron Abraham. I'm the founder and CEO of Exclusive Option Picks LLC. I have a combined of 13 years worth of stock market and option trading experience, and that also includes the great recession we had back in 08-09. About a year and a half ago, I decided to open an option group on WhatsApp. to discuss options trading ideas and to speak about the general market as a group. With time, the group grew from 2 people back in late 2017 to 200 people as of today. Again, the main objective of this group was just pretty much to talk about trading ideas and the general market. The majority of the people that were pretty much in the group were very new to the market. They never traded really, or they're very limited in trading resources. So all the insights and trading ideas I brought and other seasoned investors brought to the table was very useful to those new traders, and they got to learn a lot in a very short period of time. But there was just one small problem that people encountered. Since it was a public group, a lot of people made comments throughout the day, and a lot of my lessons, trading ideas, etc., got pretty much lost in the sauce. So to make a long story short, about 2 months ago, a few people from the private group messaged me and asked me if I could open a private paid subscription group that'll be the only one that can actually post in the group and not the entire population of the group. So my trading ideas and lessons will not get interrupted, because up till last month, we had 230 people in the group, and all the newbies, seasoned investors, all kind of made comments, and some of the more relevant, useful information was kind of embedded in between a lot of less relevant comments. So that was one of the biggest bottlenecks this group had. So I took upon myself this journey, and I thought about it a lot. And at first, I really wasn't sure if I was going to do it or not, as I didn't have the time to market myself. But then again, I thought about it and said to myself, hey, you know what? I have a public group of over 200 people that know what I bring to the table. So I decided to advertise it there and see how it goes. So thankfully, in less than 3 days, and we're talking last month, that happened, I guess, October 25th of last month, over 70 people subscribed to the group, and it has been doing very well so far. Even though the market is pretty brutal right now. I mean, if you're in the market right now, you feel the pain. I'm getting a lot of great feedback, and the majority of the members already renewed their membership in the month of November. So that's very encouraging, and I'm very happy about that. So in the next slide, I'll explain exactly what we do and how we do it. And again, if you have any questions, I'll be more than happy to answer. So the paid subscription group I'm running is on Telegram. It's an app similar to WhatsApp. One room is private, where I'm the only one who can post, and the second room is an open chat room for all the premium subscribers, so they can actually discuss their running trades, exit strategies, sharing ideas, suggestions, etc. So I implemented this idea that actually people can speak upon themselves and see what's going on with each trade, and kind of talk it out between themselves. So it's not just me talking. I also want to hear other people's opinion to see what they think and what they feel. In the private room, I post a minimum of 12 trades a month. I post them as soon as I buy and sell. So as soon as I buy a stock or an option, I'll post that trade immediately to the group, so they're the first one to know, they're the first one to get it. So that's that. In addition to that, I give my reasoning as to why I get into a trade. I post my exit strategies. I also, post the riskiness of the trade, whether it's a conservative trade, whether it's a moderate trade, whether it's a risky or very risky trade, because every single person is very different than the other, meaning some people are willing to take more risk, some people are willing to take less risk. So not every trade will work for every single individual. Therefore, I do post my reasoning and the riskiness of the trade, and I also post my size of the trade, meaning that if I have an account size of $20,000, my rule of thumb is not to spend more than 10% on a specific trade, and on that specific trade, I'm not going to lose more than 40%. So I call this the 10-4 rule. So if I have an account of $20,000, I limit my one specific trade to $2,000, and once I reach a loss of 40%, I get out. So in any market environment, whether it goes up or down, there's no reason for me to blow my account, because I can only lose up to 4% a trade. So that's also something very big that I implemented with my trading, and it works very well. Also, at the end of each week, I post an Excel spreadsheet to track my record with all my trades from the beginning of the month. So in addition to the minimum of 12 trades, I post short educational lessons. I write newsletters every couple of weeks. It could be about a specific stock or just the general market, and I post relevant market news from time to time. So besides the trading idea, it's also a very educational group, and people learn a lot from it. The fee for this group is $54 a month, but if you register by the 25th of November, the subscription for the month of December will be $45. We also offer a 10-day money-back guarantee to anyone who is not satisfied with our service. So if you're not happy for any reason, you email us or shoot us a text, and you get your money back immediately, no questions asked. For the record, out of the 72 paid members we had in November, only one member asked for their money back for personal reasons. But as mentioned before, we're not asking questions. We returned the money and we moved on. We also offer an incentive program that you get a $6 credit a month for each person you bring, as long as they stay. So, for example, if you brought 5 people and all 5 stayed for a period of 12 months, you're going to get a discount of $30 each month from your subscription. So far, we've provided the group with 15 trades. 2 are still active trades. We haven't closed them yet. 11 trades were winners and 2 trades were losers. If you take the average of all the trades combined, including the losers, the average return on investment was about 15% trade, give or take, which means that if you invested $1,000 each trade, we would be looking at around 75% monthly return on investment. So that would put you with $1,750. That's a pretty nice return, but again, I wouldn't expect it every month, because my true goal is above 60% success rate. I believe that if you get above 50% and you cut your losses quick and you let your winners ride, 50% or above, it's very good. But my true goal is to get above 60%. Also, regarding our subscription program, we're also working very hard on our upcoming website. We hope that it will be up and running in the month of January, so we're very excited about that. So that's also something we're looking forward to. So that's pretty much it. So first, I want to thank you for your time. I know it's a holiday weekend and people are cooking and getting ready for Thanksgiving, but I'm glad I was able to share with you my introduction to option trading 101 and regarding my subscription group. Again, if you wish to register to our group or need more information, please contact us at exclusiveoptionpicks@gmail.com and leave us your cell phone number so we can get you started. And if you don't have an email for some reason, you can always shoot me a text at 954-557-3018, and we'll be very happy to assist you with any questions or concerns you may have. So I guess now it's time for Q&A. So from now on, I'll be taking questions from you guys, and I'll be happy to answer.
Let me ask questions on their behalf, Ron. So the
Yes.
first question is from Nagesh. He's asking, what do the following 4 trading choices mean? Buy to open, buy to close, sell to open, sell to close.
Okay, so buy to open is the first example I gave. So when you buy to open, you buy an option and you're gonna write it out just like in Apple. So when you want to buy an option, either a put or a call, you would buy to open. Sell to close is when you decide to sell that option. So buy to open, sell to close, that's what you guys your main focus should be. Sell to open, buy to close, it's the seller option that I would not recommend doing at the moment. It's very advanced, and your account needs to be, I would not exaggerate, needs to be at least at $100,000, because when you sell to open, you're actually selling the options. So as I mentioned before, when you sell an option, you can lose an infinite amount of money, but you can only gain up to 100%. So let's say I'm selling an option. Let's say I'm selling an option, and let's say it's Apple, and I'm selling the $160 put for $6.50. So I'm collecting the premium of $6.50, just like the seller of the house who collected $10,000. I'm collecting $6.50. But if the option goes against me and Apple goes to 140, I collected 6.5. Now I have to return 20. So instead of gaining 6.5, now I'm losing over 200%. That's the sell to open. And then when you want to cover that, you have to do buy to close, buy to close, correct, buy to close. So when you sell to open and buy to close, you're the seller of the option. When you buy to open and sell to close, you're the buyer of the option. And in today's presentation, we're just talking about buy to open, sell to close.
Okay. So the next question is, can you do options on our behalf?
Excuse me?
Like, can you do options if somebody wants to invest some money, give it to you, can you do on their behalf instead of getting training?
Unfortunately, I don't do that, and I don't provide that service. I'm not a financial advisor. I'm not an investment broker, so I don't, trade on behalf of other people. I just post my trades, and people, take it upon themselves whether to buy it or sell it. Unfortunately, I don't do that. I don't, play with other people's money, if that's the question.
Okay. The next question is, how is your approach different than other websites like optionsalpha.com?
I'm very transparent, very personal. All these other, again, I'm not sure exactly who's optionalpha.com, but I know there's other websites. But my subscription is very, very open and very transparent. I follow up on every single one of my trades. I don't just send trade alerts and tell you when I bought, when I close. I actually follow up. I do answer questions when needed. So when it comes down to what's the difference, my personal level is very high compared to other paid subscription groups.
Also, do you also provide any trainings other than giving these trades, Ron?
At the moment, the only subscription I have right now is the trades, which also comes with lessons and educational learning. So it's not just trades. I mean, when you look at the at the Telegram chat, you'll see a lot of very useful and resourceful lessons. So it's not just trading, but to answer your question, I don't have something just for educational purposes. I'm willing to, to consider that if I get a good amount of people interested in just doing, educational and an educational room, if that's the question.
Okay. So this is the next question from Shubham. Here is what happens in other groups. They post 20 to 30 trades. 70 of them are failures. 30% are successful. No one can play all the trades right. So average will be in profit, but that's only if we play each and every single trade. Mm-hmm. So how do we mitigate that?
So first of all, everything you said right now, it makes sense. You cannot play every single trade. Therefore, the extra thing I bring to the table is, posting the risk appetite of the trade and, and the sizing. So when I enter a trade, I'll pretty much say, okay, this trade is risky, conservative, not conservative, and this is the amount of money I'm willing to risk. So obviously, if you have an account of $5,000 and my trade is, let's say, $2,000, then you would break the 10-4 rules. So obviously, you cannot be, trading that. But regarding the 30% success, 70% failure, I mean, that's something it's out of my control. I mean, obviously, that subscription group is losing money too. So if they're winning 30%, losing 70%, then obviously they're losing money too. So I'm not sure why they're having a subscription group that loses money. I mean, again, I don't guarantee anything, but I mean, the whole point of this is, for people to learn and, potentially make money. So, anybody would lose money on the 30 to 70% success rate. So, I mean, my goal again is to be 60-40. And yes, I mean, if you trade only the 40%, then, it's very unlucky. But if you trade everything and, follow every single one of my trades, then over time, you'll most likely could be profitable.
Yeah. Next question is like up to how many months contract we can go for?
Okay, so if you're talking about an option, there are leap options that I know out in the market. There are some options that goes through January 2021. So there's almost over 2 years worth of contract options. So let's say, for example, if you're a very conservative person and you don't want to risk short-term money, you wouldn't buy an option that expires next week or next month. You would buy an option that expires in a year or year and a half. So you give yourself more time. You have more leverage to let that option plays out. So for example, if we have a stock like Apple that are at $175 and you're buying the $200 calls for next month, those options will be very cheap, but your success rate will be very low. I mean, your success potential will be very low, because if Apple goes to 210, you'll make a lot of money. But if you buy the 200 call option for a year and a half, that option price will cost you a lot more. Like instead of 50 cents, you'll pay $10. So obviously, the more time you have, the more the premium will cost you. But it's a much more conservative play. So you can buy options 2 years out.
Okay. Next question is like, we have many websites to analyze and learn about stocks. Are there any good websites to know about different type of options?
There's a lot of good information on Investorpedia regarding general options trading, and also there's something I use called stockcharts.com that I analyze charts. They also have very good educational material, and they charge, I think, $25 a month. And there's a lot of good material there for beginners.
Okay. Next question is like, what is the tax rate on quick gains? Is it different in every state?
Excuse me?
What is the tax rate on quick gains? Is it
okay? So the tax rate on options that you hold less than a year, it's called short-term capital gain. You're getting taxed at your ordinary income. So if your tax rate is 25%, you'll pay 25%. Or if your tax rate is 37%, you'll pay 37%. But so there's no special tax treatment for short-term capital gains. And obviously, if you're in a different state, then you might pay a state tax. So states like Florida, Texas, Nevada, there's no state tax, so you don't pay an additional tax up to the state. But the short-term capital gain tax is based on your ordinary income. So it all depends on how much money you're making. And that's that would answer your question in regards to what's the tax rate. It could be between 0 and it could be up to 37%, which is the highest tax bracket in 2018.
Yeah, next one is, can you give us an example of a trade you've suggested to the group this month, and what's your rationale and outcome of the trade?
Say it again, sorry.
Can you give us an example of a trade you suggested to the group this month? What is your rationale and outcome of the trade?
Sure. So let me pull up the Excel that I posted today to the group. I'll do the first trade. The first trade of the month was Celgene Corp. I suggested buying the January 18, 2019 $80 calls. The price I paid was $1.59. It was a day trade, and I sold it 40 minutes later for $2.3. That was a 44% winner. And I bought it as soon as the market opened. The stock was near support, so I believe that there was going to be a quick bounce on the stock. So that was just one trade. Also, I gave an alert today regarding SPY. SPY is it's short for S&P 500. I gave a suggestion to buy the SPY 269 puts for actually today expiration for $2.07. Unfortunately, I got out quick. I got out when the option was at 224, so I made 9%. But if you look at today's closing, the option is worth $4. So there was a potential gain of 100% to be made on that trade. So sometimes my rule of thumb is 10, 20, 30% gains will win in the long run. I'm not looking for, the big home runs, 5, 6, 7, 800%. Yes, if it occurs, it's great, but I'm looking to get in and out quick with 10, 20, 30% gains. Then looking back at my 15 trades, I could have made so much more than what I've actually made, because I'm not looking to the home run trades. Like, for example, yesterday, I suggested buying the Amazon 1450 puts for this Friday. The puts cost me $5.51, and after less than an hour, I got out at 6.5, which is an 18% return. But at the close, near the close, those options went for $12. So I did leave a lot of money on the table, but the actual alert was correct. Again, I was looking for the 10, 20, 30%. Some people made a lot more based on their feedback. Some people made 50%, some people made 60%, some people made 70%. Because, everybody's risk appetite is different. So when I close a trade, it doesn't mean that everybody should close a trade. That's just based on what I do and how I do it. And also, I gave my reasoning as to why I got into the trade. So I'm not going to just post a trade, oh, here, I got to Amazon 1450 puts for 5.5 and have a nice day. I actually, explain my reasoning as to why. So for this example, I wrote that I bought the Amazon puts for 1450 because the stock at the moment was at 1534, and that represented a double top. It's a technical term in charts. So that pretty much, usually plays out that the stock should drop right after. So, when that hit the double top, I said that the stock will turn negative, and in fact, the stock dropped 40 points in the next 2 to 3 hours. So those options were pretty good.
Yeah, thanks, Ron. Next question is, do you recommend using retirement account to minimize avoided trading fees on gains?
If you're looking to strictly minimize fees, I don't like them too much, but Robinhood offers free service. Their stock and options are free, so you can buy and trade all day for free. You don't have to pay anything. Extra retirement accounts like, maybe an IRA or 401k, the investment cost is not that cheap. So if you actually manage your own portfolio, it's much cheaper in the long run than giving it to, a 401k or an IRA account.
Okay. The last question. I assume you trade stocks as well. What kind of stock trades you do? Short term, day trade, or long term?
I don't trade stocks. I own stocks, which means I don't buy stocks and flip them like options. Options, I trade them, but stocks, let's say I can have stocks in my portfolio that I've been having them for years, and I'll just keep reinvesting them with my dividends, and I'll just keep buying and buying. So I have a portfolio just for stocks that I buy and hold. And of course, if I feel like the stock should go lower, then I'll probably sell it medium term. But regarding stock, I usually have a long-term stock. I also have a 401k account that, I contribute money to it every couple of weeks. But regarding my trading portfolio, I have a separate trading portfolio for stocks, and I have a separate trading portfolio for options. But stock-wise, I don't trade as much as I do options. Options is much more active than stocks. Stocks I just like to hold, because at the end of the day, when you guys look back 100 years, the stock market is on a uphill. Yes, there is the downturns and the upturns, but at the end of the day, if you look at it, it's like a rising mountain. So I believe in the stock market a lot in the long term. So if you guys like stocks, I would recommend, buying stocks that you believe that can do well in a 30, 40 year time frame, and not 2 or 3 months time frame.
Yeah, next comment is, I would like to sign up for this. So do you want me to send an email to the provided one? And if I send
Yes.
tomorrow, will I get trade alerts for Friday?
So the sign up group for this specific presentation is for December. So the November group is already closed. So I will add them to the group today, but it's for December group, so they're not going to get trade alerts till December 1st.
Okay, so they will have time from December 1st to December 10th, either to continue or cancel, right?
Correct. So after December 1st, they have 10 days to pretty much analyze the group, see if they like it. If they don't like it, or any other reason, they can ask for their money back, no questions asked.
Okay, Don. Any other questions from any other members? Let me unmute everyone in case if you want to ask something. There's one more question, like, do you have any limit for portfolio?
Say it again.
Do you have any limit for portfolio?
I'm sorry, I'm not sure I'm getting the question.
So you have any limit for portfolio?
What do you mean by limit portfolio?
Limit for portfolio. Like, do you suggest, maybe Ramesh, do you want to expand on the question? I am unmuting everyone. So to trade options, are there any minimum limits the broker requires?
Oh, okay. That's barely stated. I use E-Trade, and I think they require you to deposit $1,000. But a company like Robinhood or other free brokerage, I don't think there's a limit. No. So the maximum is $1,000. So the $1,000 will be probably the maximum that you have, the minimum that you'll have to put in order to start trading. But I know other brokerage firm that either requires you nothing or $500, but it's not more than $1,000.
Okay. Do you day trade options?
Yes, I do day trade options. So I would say half of my trades are swing trades, meaning I hold them overnight. Another 20%, I would say I buy leap, meaning I buy long-term options, and about 30% I day trade. I just saw the question. That would require a 25K and over account. Yes and no. You could still day trade options and have an account below $25,000, but you can only trade, I think, up to 4 times a week. Each time you trade an option, it takes a full business days for the money to settle. Unlike stocks, where it takes 3 full business days to settle, options takes 1 day. So with an account of less than $25,000, you cannot trade unlimited amount of options. You can just trade 4 times a week before they give you a 90-day trading restriction, which means that you can only buy one option at a time with the same money. So let's say, for example, you have an account of $5,000. You can use the full account of $5,000 whichever way you want. You can buy 10 options the same day with just $5,000, but you cannot flip those $5,000 over and over and over again. They'll restrict you from doing that. But if you day trade an option, let's say, for example, today I bought the SPY puts, the money will clear tomorrow, so I can trade with that same money tomorrow. That's the benefit of options, is that money takes to settle only 1 day versus in stocks, it takes 3 days.
Again, one more member is asking like how to subscribe to the group.
So in this page, you can either email me or shoot me a text, and I'll send you the full details of the group, and we can go from there. I just saw that somebody said I missed the beginning of part of the presentation. Is it possible to get a presentation recording? The answer is yes. The presentation is recorded, so you guys can see everything from the beginning.
Yeah.
So the next question is, so in your calls, how many day trades calls you give per week? Again, I guarantee 12 trades a month. Sometimes I'll give more. Just like this month, I already gave 15 trades. It doesn't mean every month I'll trade that frequent, but there are no rules for me. If I don't like, if I don't like to trade that day, I wouldn't trade based on, various reasons. Either the market is, very rocky, or I just don't feel like trading that day, then I would not, it doesn't mean I'll trade every single day. But on average, I think I give about, a trade every day or every other day. Yes, I don't overtrade. I mean, that's the number one rule I learned on my own money. When I used to overtrade, 3, 4 years ago, my head was in so many different places and I couldn't execute properly. Now when I trade a trade at a time, my success rate is 10 times better. So that's another big tip I can give you guys, that, the least you trade, the better the outcome could be. Are you full time on trading? I would say half time. I don't trade. I'm not on the computer 9 hours straight, but I'll be on the computer when I feel like a trade needed to be executed, and I'll monitor it, fully. But it doesn't mean I'm trading from 9 to 4.
There is one more question. Even though we get alerts, we have to make some decisions at that moment to capture the gains or cut losses. I think you already covered this. Like, what sites would you recommend to learn about the options trading?
Yes, this one we already answered. I would recommend going to stockcharts.com. It's a very good basic website that talks about a lot of different strategies, charts, and very useful information for beginners. So I think that one is a very good one.
So Ron, so the interested members will subscribe to the group, but do you want to do another 1 or 2 or something in sometime maybe next week or 2 weeks later?
Sure.
Or?
So absolutely. So what we can do, I can set up a presentation for options trading 102, and that will cover a little bit more advanced information. But I think today's presentation just gave us a clue of what options trading is, what's the potential and why people do it. Now the next presentation will be a little bit more in depth and more, we'll cover more details in depth as to how options move, how premiums get adjusted on a daily basis. So there's a lot more things to talk about, but I just purposely did it, a presentation at a time, because I don't think it's useful for everyone to have an hour worth of presentation about option trading world, and they'll go home, scratch their head, and be like, oh my god, I just forgot everything I learned. So I think one presentation at a time will be the most useful for everybody. That's how I learned, and that's the thing. That's the best. That's my best advice.
Yep, I agree, Ron. So yeah, again, on behalf of all our members, thanks again, Ron. I know it's a holiday weekend, but you took time to explain.
Well, my pleasure. Thank you very much, guys, and hopefully we'll see you again next week.
Yep.
Bye bye.